What's going on, Investomaniacs? Knight Rider here, and today we're taking a look at the Cloud King, Salesforce. All right, let's take a look at their most recent quarter, which was the fourth quarter. They reported yesterday on March 4th, and they delivered another fantastic report. It was really the best report. It was the greatest report that's ever been reported in reporting. Analysts were looking for 55 cents earnings per share on a non-GAAP basis. That's the adjusted earnings. The whisper number was 60 cents, and they reported a blowout with 70 cents earnings per share non-GAAP. The analysts were looking for revenues of $3.6 billion, and Salesforce met those expectations by delivering $3.6 billion, but that did exceed their own guidance. Salesforce also raised full year 2019 guidance. So why did the stock go down 4% on the day leading up to its report and another 1% after it reported? Simple. Okay, well, first of all, let's deal with the 4%. That had nothing to do with Salesforce. That was just an overall market downturn, and the cloud stocks and super high growth stocks were hit particularly hard. Now let's talk about the 1% additional drop after it reported. Well, first of all, the stock had ran up 38% in about the past 2.5 months off of its December lows. When you run up 38% in that short of a period of time, expectations get super high. So when you only meet revenue expectations and don't blow things out of the water on every single front, and analysts were also a little bit concerned about next quarter's guidance, thinking the revenue guidance was a little bit weak. So again, when you run up this far, this fast, and valuations get high, expectations get high, and you have investors wanting to trim a little bit of money off and put it in the bank so they can lock in them gains, you really have to blow out the quarter. So it wasn't a bad quarter. It was a good quarter. It's just the stock ran up so dang much. So let's take a look at some of the quarter's highlights. Fourth quarter revenue of $3.6 billion, up 26% year over year. Full year 2018 revenue, that's fiscal 2019 for them, $13.28 billion, up 26% year over year. Fourth quarter operating cash flow of $1.33 billion, up 27% year over year. Salesforce is targeting $26 to $28 billion in revenue by fiscal year 2023, which is organically doubling their revenue in the next 4 years. That's a compounded annual growth rate of 19%. Fourth quarter GAAP diluted earnings per share, that's the real earnings, was 46 cents. However, those earnings did benefit by 17% due to tax adjustments. On the non-GAAP basis, as we said, they earned 70 cents. For fiscal year 2019, the GAAP diluted earnings per share was $1.43, and the non-GAAP diluted earnings per share was $2.75. So, should you go ahead and buy this dip in Salesforce? Hey, I'd say the cloud stocks have done fantastic for you these past couple months. I wouldn't buy any more at this point, and if you're looking to initiate a position, I'd wait a little bit, hope for a little bit more of a pullback, and then I'd pull the trigger. Hope you guys have a great day.